Hello, how are you doing? It's good to see you. Welcome along to our special FTUK summer live stream. I hope you enjoy the party atmosphere that we've put together, because we are doing our summer promo for today. It's starting today throughout the entire summer. It's something that a lot of prop firms do, and we are no different. So we're going to talk about it today, and we've themed our entire stream around that. So yeah, unfortunately it is summer, but unfortunately it's rained here all day. So there you go. That's it. A typical British summer for you. So let's have a look at what we're going to be talking about today. We'll obviously go through the summer offer for everybody, but I do want to talk about month-end flows, because that is happening today. We're going to talk about which asset classes are the ones to maybe trade over the summer. Well, we're not going to reveal too much, but I want to touch on the subject for something that we're going to do next week. So that could be quite important. Obviously, the summer offer is where we're going to be focusing most of our attention. And then finally, what I want to do is I want to talk about a profitable account that has recently passed on the 90k evaluation, and it's an absolutely amazing bit of work by this trader. We're not going to name him, but I want to go through his account in some detail and pull out some of the lessons that we can all learn from. And yeah, it's really, really interesting. Stunning piece of work by this guy, whoever he is. And I must not forget to remind everybody about non-farm payrolls, which is happening next week. So yeah, we've got a lot to do. If you've not joined our Discord, then please do so. You can see it up there in the top corner. Scan that code, and our team will look after you on Discord. No question about that. We've got a lot of people on there now, and yeah, anything that you've got problems with, that's always one of the routes that you can get some help and assistance from at FTUK. So let's begin by talking about month-end flows. I will just get rid of the music. And we'll talk about month-end flows, because that is today. If you've not traded before, or you're relatively new to the prop space, then today is a day that can be a bit confusing. If you've had a good week and then suddenly you start to find that the markets get a bit erratic and there's moves going on that you can't really explain, then it's probably because of this. So what tends to happen is a lot of institutions, banks, hedge funds, sovereign wealth funds, pension funds, that kind of thing, they will all start to square off their positions at the end of the month, which makes sense. They're usually putting a lot of size through the market as well. And what that can mean is it means that we can get a ragged end to the day. So just be careful if you're trading those S&Ps or the NASDAQ towards the end of the US session, or gold, crude oil. I think crude oil has dumped quite a lot today already, and that is a component of month-end flows, or it's certainly can be at times as well, unless there's some fundamental information behind that. But I just glanced it out of the corner of my eye before I came on the stream. So that could be where you get a bit of volatility from, and it's because we are at the end of the month. So just be careful. Everything gets reset. Everything in markets is cyclical, so that will all reset for next week, and then we are back to normal, and then into the new cycle, non-farm payrolls. What goes around, it just keeps coming around again as well in markets. So yeah, there we go. Next, let's talk about summer volatility, because we're summer themed today, hence the t-shirt and the promos and everything. Volatility over the summer can be something that is confusing. Once you've been trading a few years, you'll get used to the pattern of how markets move, and quite often we'll get a good window of trading from January through to Easter, and then the summer can sometimes be a little bit difficult. You know, the old adage of sell in May and go away, all of those kinds of things. Most people will sort of like, well, I mean, they say that, I mean, when I was, learning as a trader, you'd constantly be told that lots of traders, they just leave their desks and they go away for the summer. Well, I don't know a job. Even if you are a professional trader, I don't know a job where you can just leave for the summer. I mean, it just doesn't happen. So I think that's a little bit of I'm not quite sure, an old wives' tale or something like that. But there is a component of volatility that does change during the summer months as the market starts to thin out. And then from September up to the second week of December, that is a golden time as well. So you will get used to this as you start to put a number of years under your belt as you're trading. So there is a seasonal component of that. Now, certainly, seasonality in trading is something that some people trade a lot of, and particularly agricultural traders. Obviously, there is a weather cycle season to how crops grow in the ground. So it is that seasonality is a big thing in agricultural markets, but also a lot of financial assets can have that seasonality too as well. So once you're at that seasonal high, you're then sort of going to decline, and then from the decline you'll reach a seasonal low, and then there's some sort of a rise up from there. Now, traditionally, one of the strongest biggest ones is the gold market, because the gold market always tends to fall towards the end of the summer before the Indian wedding season then picks it up and pushes it higher into October. That is definitely a component of how excuse me, of how the gold market moves. So what I thought would be a good idea to do is I'm going to put a bit of research together over the next week of what I believe to be the key markets that you should maybe focus on towards it, over the next 8 weeks through this July period into August. And what I thought we could do as well, if you look on the YouTube community tab, we put a little poll on there this morning, which is just talking about what you think. And really, rather than me saying, okay, this is what's going to happen over the summer for all of these different asset classes, what do you think is which assets do you think tend to give us more volatility over the summer? Is it going to be something like crude oil? Is it going to be something like gold? Are the stock markets dead in the summer, or are they more active? Or should you be focusing on currencies throughout the summer months? It's an interesting question. I'm very interested to know what people think. So if you do have a second and you're watching the live stream, just head over to the community tab, just stick your mouse on there and just put a vote on there. I'm very curious to see what most people think. And then next week, I will put some information together on what maybe there is a seasonal tendency for. What you've always got to remember, though, with seasonality, particularly during the summer, is people say, well, there's less people there, so the markets go dead. Actually, that's not true, because quite often you'll find that if, as the market starts to thin out, as in there's less players involved in the market, what can happen is the volatility can actually pick up in some markets. So if we're talking thin markets like crude oil, like gold, like the NASDAQ, you can find that because there's less people there, the price is far easy to bully around. And so that in itself can give us a lot of extra volatility. So it's not just a straightforward case of saying, it's the summer months, everything's dead, don't bother. That's not the case. The opportunities are there. It's the change in texture that you've really got to pay attention to. So please do bear that in mind. So yeah, we're going to do that for next week. But yeah, I'd be fascinated to know over the next 7 days if people can just stick a vote in there, and we'll see what that looks like towards the end of next week. Okay, so let's talk about our summer promo. So this is the theme for today. Let me get the music back on as well. Took ages to get all this sorted. So a lot of prop firms, they do a summer promo, and we are doing the same as well. We've got a great discount. This is going to be there for the entire summer. So if you want to get yourself stashed up ready for an account that you can trade into Christmas, into September and October, the next 8 weeks are a really good time to maybe get involved, because we've got on all of our accounts, we're going to have a 30% discount on everything, and you're going to get the add-on included in there where you unlock that final level, that level 8, which I think you have to pay for as well. All you need to do to take advantage of this, and it's a leisurely approach here as well. You can just go on there any point during the summer, and you can get one of those accounts with a big 30% discount on it. And the code that you're going to need is summer30. So 30% off everything over the course of the next couple of months, which is really, really good, really good discount. And then that gives us this, hopefully when the song comes out, this gives us a reason to, I don't know, celebrate, something like that. Okay, so that is our summer promo. Now, let's talk about this account here. Last week, we talked about a 1-star Trustpilot review trader, which was great to see a lot of people contributing to the comment section on YouTube about that. We're going to pivot that 180 degrees this week, and we have had in the last in the last week or so, we've had someone that's passed a 90k account, that first level on the 90k account, and boy, did they do it in style. I mean, they really did it. So we thought it would be a great idea to sort of like profile this. We're not going to reveal who it is, obviously. We can't do that. But we could look at some of the ways that this account has been traded. A, to show you that it's possible, and B, to show you what it actually looks like. What profitable trading for a prop firm that does have a lot of rules, and a lot of the prop firms do have a lot of stringent rules, what that trading actually looks like. So this is a 90k account. It started at the quarter balance point. That confuses a lot of people. It's something that we're going to be looking to change relatively soon. But the reason why we always start at that quarter, that 1/4 of that 90 of that value of the account, is always because the money that people pay up front to get involved, because we don't know them, we don't know how they're going to trade. That allows us to just let them get warmed up, as it were, before we give them the 90k account. That's why we always start at a quarter of the actual balance. So this guy started at 22,500, and of course with all our accounts the drawdown and the target are always the same. So there was an 8% drawdown, $1,800 room on the account that he could use, and then also the target was that he had to hit was 2,250. So there's a lot in here. There is a lot in here, and it's really, really good. So this chart that you can see in front of you, I've broken it all down pretty systematically. This is a daily time frame. Now, this guy only traded one thing, which in itself is an advantage and something that you'll never read in any books. You'll never hear from any brokers or anything like that. He only traded one asset class, and that can give you a huge advantage. We have a lot of guys that trade everything, but you don't need to necessarily do that. Having an awareness of what's going on around you in other key asset classes, like if you're trading gold, you should, have an idea of what some of the other currencies are doing. Certainly, got an idea of what the dollar's doing, or what the sentiment is in the stock market or the bond market. You can talk about that, but the actual trading, you don't have to trade everything. And this guy didn't do that. He just traded the Australian dollar against the US dollar, and you can see here. This is a daily time frame here, and this is the period that he traded over. So he started at the end of the end of March the 25th, and he finally hit the target on June the 20th. So there's a total of 82 days there, but he only actually actively traded for 27 of them. That in itself is a massive lesson to so many people. We have people that get angry and they've not passed, or they breach their account, or they've hit the target, and they do it in one day. This is a demonstration of what consistency looks like. Taking your time, taking it nice and slow, having a span of an account, but then picking out your areas. He's really demonstrating full control of his own trading abilities by working like that. It's an absolute masterclass in how to go about trading for a prop firm. Now, I think the choice of asset that he used and the type of market structure that we've got on the daily time frame has certainly helped him, and I'm going to go through that in a little bit of detail. But just remember the imprint of that chart, what it looks like, because that's going to become useful in a little bit. Let's just look at these statistics. Anybody that has been part of our community before, that has had an account with us, will recognize what this is. This is part of the dashboard. I've pulled out some screen grabs of that, and you can see the consistency from the end of March here all the way through up to the target here in the last week or so. Now, look at this here. This area here, this whole flatlined area from sort of the middle of April up to, I think it's around about the middle of May. That shows incredible patience of saying, okay, maybe the market is not in tune with the way that I want to work. Maybe that's what it is. So therefore, I'm going to just sit back and I'm just going to wait. I'm not going to try and be a hero here. But maybe there's one or two trades in there, but he's just being patient and waiting for the market to set up the way that he wants to set up. Now, that bit there, if you look back at the chart that I was just talking about, is this period here. So you see this daily time frame these daily time frame candles. We've got from the start of the account quite a volatile, expansive structure that moves into a trending environment. So obviously we've got a sequence of higher highs, higher lows, and that gives us the trend, and then into a range. This guy didn't really want to be part of the trend, which tells us that he's a counter trend trader. He's a range trader. That is where he is most comfortable, probably in terms of his strategy and his time frame and how he likes to be ringing the cash register in terms of knowing when to come out of the market. That is incredibly valuable to know. Now, a lot of people that in the stock market will always say, I'm a trend trader. So trend traders tend to be more common. Breakout traders tend to be more common. Trading the range is something that takes a lot more work. So this guy is definitely experienced. He's been doing this a while. No question about that. This is not random. This is very careful, considered trading. Also pay attention to this blue block here, because this is where he basically identifies where the trend has then be really turned into a range. And he starts to really then put his strategy to work. So that also as well represents this area down here. So if you imagine that we've got a very flat-lined area over the course of the duration of that trend on the daily time frame, as that texture starts to change, he actually starts to drop down a little bit. So if you imagine how patient you've got to be, you've been trading since March, and actually you can feel for a good 6 weeks like you're flatlining, like you're not getting anywhere. That's what that must feel like. So that's really difficult. This is usually the point in time here where most retail traders that have not traded before for any length of time or have been through the cycle a few times, this is usually where they either give up, blow up their account, switch their strategy, change to something completely different, move to a different asset class. They don't stay for that extra bit and then just with a neutral mindset jump straight back in and carry on in the same fashion. And this shows you that it can be done. It's really, really important. Really, really important. It's absolutely fascinating stuff. So he only focused on the Australian dollar. For the reasons that I've just explained, it seems to be he's a range-bound trader, certainly counter-trend. He's wanting to avoid those big trending periods of time. And he's got incredible patience. I would say that realistically, it's the patience that's really done it for him, and that is a hallmark of someone who's been around the block once or twice before, you know. And even with us, he'd had several accounts that he'd hard breached before, and he'd obviously, you know, taken his time, taken a rest, and come back and tried again. And this is the resulting trades from that. So what I've done is I've not dug too much into detail of every single trade. There's about 120, 130 trades in total. Since March. What I have done is I've pulled out some of the key ones, the biggest metrics, yeah? So we're going to look at the longest trade, the shortest trading duration. We're also going to look at the most profitable trade, and then also the least profitable trade as well. And you'll see that he's got, there's a lot going on there. Now, the actual statistics from the table, let me just draw your attention to this. The average winning trade was $93. The average losing trade was $59. So he's got a beautiful ratio of winning trades to losing trades there. That is absolutely picture perfect for in terms of having the numbers and the edge in your favor. His expectancy, a very healthy $13.62, which is fantastic. But what this is how you know. His winning percentage was only 48%. 52% was actually his losing trades. Now that shows you a lot. Yeah, so it's a really, really interesting process that someone has gone through to arrive at being able to consistently perform like that in the market. So we're going to look at the longest trade. This is from the 24th of May. It lasted 4 days, but it only happened to be the longest trade because a weekend spanned in between. And obviously with FTUK, you can hold a weekend. That's fine. There's nothing wrong with that. So this ended up being 4 days and 6 hours in total. And you can see it here. It's a beautiful long trade off the market moving into an area of support in the bigger picture, and then he's traded that up as far as he can. Now, what I can tell from this is he tends to, more often than not, come out with a trading stop. And that's another hallmark of someone who really knows what they're doing, because if you are always consistently using a trading stop and just grabbing the profits just because you're looking at the P&L, what you're always doing is just saying that the market can always keep going in my favor. And that trailing of the stop always tries to keep you in as long as possible. Now, exactly how he was trailing it, I don't know. Now, there's lots of different ways you can do it. Percentages, the number of points, a dollar amount. You can use some tools. I'm a fan. When I'm in a profitable trade, I use a parabolic. That's my way of getting out of the market on a profitable trade. There's different ways of doing it, but you can see where he's actually been just spiked out of the market on that pin bar. This is a 1 hour time frame, I think it is. He's just been spiked out there, but he just got the meat of the move. Now, the blue block there that you can see there is this period of time here. That's when he was at his lowest in terms of equity. So what you've always got to remember when you're looking at these trades and you're thinking about your own trading, when you're journaling and you're doing your analysis, is where am I psychologically? Where am I in my own cycle of how I'm trading? That is very, very telling, because this, like I said before, this is the point where most people give up, they blow up. Yeah, but this guy hasn't done that. He's obviously managed to push past that and then just carry on as normal, knowing that the odds will play out in his favor. His setup will come around again. There he is. He's in a range bound market. He knows what he's doing, and then he gets the position. And then once that happens, you can see. So that basically that point there is this point here. So you can see how that final surge towards the profitable target. So you've got quite a few things going on there, but it's the consistency of it that is quite rare. Really, really fascinating. So that is the longest trade that was in the market. There was obviously a weekend in there as well, but that is why. Let's look at the trade that was on for the shortest amount of time. Obviously, we talked about in detail last week about the 30-second rule. You do need to have a trade on for 30 seconds. The shortest amount of time this was a trade on the market on this one was 1 minute and 10 seconds, and it was a losing trade, and it was stopped out of the market. It was the 12th of June, and it also dovetails with the most profitable trade. So I want to talk about this in quite a lot of detail. You can see it there. This is the 12th of June, and this was the day of the US inflation figures. So there's a lot of dollar weakness in there. This is a 15-minute time frame, and it's basically going long here. Going along this area, fishing for a pullback potentially. I mean, I don't actually know, I'm just kind of guessing, and then getting stopped out. Now, how he's placing his stop loss there, I don't know. That's where he went long here, and then this is where the stop loss was down here. So how he actually is then defining where that stop loss placement for the initial risk should be, I'm not too sure. That is not clear. It could be based on a whole number of factors. A percentage in terms of the size that he was trading, where that would be, I don't know. It could be a bit of guesswork as well. You could argue that he's structurally under this area here because his winning trade was in this area as well. His biggest winning trade, which I'll talk about in a second, was in this area. But I thought this really opened up a really interesting discussion. And this is how you deal with volatility that's like that, because everyone that's watching this stream will know what that feels like and looks like, particularly if you weren't on the winning side and you missed it. It feels awful, and you're sat there watching it. It's your favorite market. You've not been profitable all week. You've seen a CPI print or a non-farm payroll or an interest rate decision, something like that, and all of a sudden the market pings. You're not on board, and you're watching it all disappear without you on board. That's a very difficult environment to hold mentally in your mind. And the reason is because you've got very little to the left to work with, because we've got a brand new surge of volatility. So as the market starts to rotate back down, how are you going to get involved? This is where you can really lean into some of those technical analysis tools. A common way would be there'd be a lot of fib traders on a move like this. They'd be spanning a fib across that, and fib retracement across that entire area, looking for a 50% or a 38.2, something like that, to get involved onto the long side. It could even be that is what was going on here. But again, it didn't work out, and it's difficult to know. It's very frustrating when you see the move, you have the analysis right, maybe you missed out on it, and then you start getting involved and you just get spiked out. So this trade was on for a very short amount of time. It was only on for about a minute. So this guy's got a full range of trades from intraday up to holding for a few days. So it's a nice sweep there. There's a bit of swing trading in there maybe as well, but it's not strictly intraday, and that's an important point. Now, what you can do, here's a little tip for everybody. What you can do when you're faced with this situation, how do you get involved? Now, the strongest way that I've found over the years of doing this, of dealing with that kind of a market state, that kind of a market environment, is a parabolic does a very good job of signposting where the market may start to balance. So if you were to take any situation like this, drop a parabolic indicator, a parabolic SAR, on top of the chart and go up 2 or 3 time frames. So this is a 15, so go up to a 30 or a 1 hour, maybe even a 4 hour. And what you'll see is the curve on the parabolic really start to stretch out. And that's how you know that the parabolic's in its later stages. More often than not, you'll find that parabolic will give you a point in time somewhere in this candle where you've got no idea where the support was going to be. It'll give you that point. Some people may use moving averages to do a similar type of thing, and they just wait for the moving averages, the market to rotate back to those moving averages. But the thing is, it depends on your blend. Which moving average do you then trust? I mean, I'm an intraday as well. Am I using a simple moving average? Am I using an exponential moving average? Which combination? Am I using one? Am I doubling them up? Am I using a ribbon? So there's too many variables. I've always found that a parabolic does a really neat job of doing that, but it's not on this time frame. You've always got to then work with your intraday time frames and then go a couple of time frames up, and that does a really good job of helping you find where the market is going to, the volatility is going to just leave a little bit, and then it's going to sort of rest, as it were. You get the idea. But yeah, fascinating example of how you would of this guy's shortest trade. But it also comes off the back. Oh, before we get there, before I'll move on to the next bit talking about this particular chart. Let me just have a quick drink of water. Excuse me. This here is his biggest losing trade, which is $288 on the account. And there's not a great deal of context in here that I can add. I looked on the analysis of the charts to try and find a reason why you would want to sort of like, he's clearly bought, basically just been buying the pullback on this low and got stopped out pretty quickly. I can't, again, find the reason why your stop loss, your initial stop loss placement would be placed where it was. I can sort of understand the reason why you'd want to buy that low, but ultimately this one didn't work. But I get the feeling that maybe the initial stop loss distance is always the same. It could even just be a question of a set amount of pips as well. So there's different ways of doing it, but I think it's the edge really comes from that trailing stop of once you're in a win trade, letting the market do its work and letting the trailing stop do its work for you as well. So that's the biggest losing trade, $288, and this is the biggest winning trade. Now this comes off this was the trade that was before the losing trade that we just looked at, this one here, the shortest trade here. So we've been very active in the market all day. Again, this is the US inflation data from the 12th of June. It's 15-minute chart again. And you can see it's the most amazing entry here. Now, it definitely benefited from the news. Now, it's the right direction, obviously. There's dollar weakness in there as well. I think with Michelle Bullock now at the RBA, there's a fundamental reason for looking for the Australian dollar to systemically strengthen, certainly over the next few years. I'm still bullish on the Australian dollar, but that definitely was benefited by the US inflation figures in this instance. No question, though, it's an amazing entry, but what I don't know is where his initial stop was. It's possible his initial stop was probably just under this swing low here. He seems to be relatively consistent in the way that he places his stop losses. Now, the reason why I'm not sure about that is because this was a stop here. So what he's obviously done was the volatility is, he's been on the right side of the market and the volatility is picked up. He's obviously used that stop to trail up behind it, and then he's come out of the market. But I guarantee you one thing that is very frustrating in these sorts of instances is you always feel like you could have got a bit more. And what I learned over the years, and obviously hindsight is dead easy. It's dead easy to pull these apart in hindsight. There's always that risk when you've been doing this a while of thinking, okay, well, if I don't take my profit somehow, then, and I've got the meat of the move, yeah, if I don't take my profit, then what happens if this is just some sort of a volatility spike on the inflation data? So we've rallied up and all of a sudden this could just career down and go in the other direction. Yeah, very typical in non-farm payrolls. That is a fact, that could definitely be a factor here. But this is very common in market structure. So pay attention to this here. This is what you could do in those types of situations. If you're on the winner, obviously you can break even on your position and let the market ride. But quite often when you get that kind of fundamental news volatility, you frequently, they're accompanied by the formation of some sort of a wedge, some sort of a rising wedge, which couples into a particular style, a particular bit of market structure, which is 3 pushes to a high. And that is very, very common. You can see on this 15-minute chart, you have got that impetus of making a high, pull back that second high, and then the third one, and that is usually the top. Not every time, but usually. And you can see in this instance that worked well. So what you could argue is that there is a case for saying when you've got some volatility like that, and wow, it's a big winner, I'm on it with some size as well, is let the market structure help you rather than have a management point of view. Now, I'm not going to say anything against this. This guy is absolutely fantastic as a trader, and he knows exactly what he's doing, and that consistency is what's giving him an edge. But the point is that it's knowing, what this is highlighting is knowing when to pull which tool out of the toolbox. And if you go back and you do some back testing on chart patterns, you will see this all the time. When you have a fundamental spike in volatility, quite often it will end with the formation of some sort of a pattern on an intraday time frame. It's very, very powerful. And then what that does is it just gives you that extra little bit of the move, which can make, again, is just adding to your edge. But, nothing against this guy. It's absolutely amazing stuff. So this guy's key for me is the patience. It's absolutely beautiful to see someone trade like this, and this guy's now up and away. He's in the next layer of accounts, the level 2, whatever it is, and he's on his way, and he'll be making money for the company as well. So it does prove that it can be done. But what I also think as well is, where's he benefited from? What elements has he benefited from? Well, he understands when to stay out of the market, and we've highlighted that by talking about this texture here. So again, this is that daily time frame where the account started. Look at this is difficult, this range of volatility here, and then that trending environment. He backed off massively, and that has really helped him, so that when the market conditions have moved in his favor, and we've got this beautiful ranging texture on the daily, everything is a counter trend play. You're looking to buy the longs and to buy the bottoms and sell the tops, and that has worked out. And quite often these ranges, they can go on for quite a long period of time. How he has defined when that period starts, I don't know. That's very difficult to work out in a few hours of looking at a few trades, but it is very, very good. It's beautifully done. So, yes, now the point I want to make about this, and this is the final thing, I don't want to go into, I could talk about this all day, but the thing I want to make a point of is that what has also benefited this trader, and it's something that everyone can benefit from, is knowing which type of environment to you excel in. Now, someone years and years ago, when I was like learning to trade, I was working with a guy who was a phenomenal S&P trader, and he said people always say, oh, the market just keeps evolving, the markets, they keep evolving, and actually that's not true. And he's right, it's not true. Markets do not evolve. Markets are dynamic, and there's a big difference. Because if markets evolved, we wouldn't see the same price action time and time again. But we do. We keep seeing the same things. So markets do not evolve. They keep repeating the same processes. What changes is the way that the market is dynamic. And that leads to two types of market state. And that is markets that are compressing and markets that are expanding, which ties into summer volatility, which is our theme for the day. So what I'm trying to illustrate is this. This trader has no question benefited from reading the market correctly. He knows which environment suits him best, and he's managed to capitalize on that when the going is good, and that's what's helped. So when I say you can market compression, this is a compression. The Australian dollar over the daily time frame over the last month or so has been a compressing structure. That's a component of the US dollar as well. Look at the Canadian dollar; it's very, very similar as well at the same time at the moment. Crude oil, well, it's looking a little bit different in crude oil at the moment, but the point is that you've got a range that starts to compress, and it's that compression that is really helping you, because human beings, they prefer market environments that are compressing rather than expanding. Why? The key reason is because when you've got a market that is compressing, you've always got the last structural high and low to mentally anchor yourself to, from a risk point of view, from a strategy point of view, from a point of view of understanding how you are going to be interfacing with the market. It's a lot easier to do. When you are dealing with an expanding structure, when you are dealing with expansion rather than compression, which you can see here, I've just drawn this broadening formation here, it's a lot harder. People don't like it. So we're always wanting to rotate back in on ourselves, which is one of the psychological reasons why we have the formation of symmetrical triangles, flags and pennants, and all those kinds of classic chart patterns. It's because of that. And people, it's easier. Yeah, it's easier for us to handle it. As soon as you get an environment where you have got an expanding structure in front of you, people don't like it. Why? Because you keep getting washed out. And you start scratching your head and you don't understand what's going on, because where you're placing your stop loss all the time and you'll feel like you're trading in the middle, you just keep losing. So you go short and then you get washed out, and then you go long and then you get washed out, and you don't know what's going on. And what's really happening is we instead of compressing, we're starting to expand. Now, I'm a big fan of broadening formations. The Edwards and McGee book is very, very good for that, of understanding how a broadening formation works. But that's the key reason. Yeah, so broadening formations are very difficult to trade, but one of the beautiful things, if you can start to get used to working with expanding volatility, is that they give you a really, really long, easy journey into pulling off the directional move that usually comes off the back of the formation of the pattern, which ends up being a trend follower's dream, because you're just in and that's it, and you just trail away and off you go. So yeah, really interesting stuff. Really, really interesting stuff. Okay, right. So let's gone on a bit about that, but it's good to have a look at a profitable account, and that shows you that people can do it. If you stick to the rules and you understand how you're working as a trader, You can hit the targets, scale up. Yeah, so I absolutely applaud that. Absolutely fantastic stuff from this guy. Finally, let me just make sure that everyone has got. I always forget every single week to say, please like, comment, and subscribe to the channel for more, which is obviously because we're trying to build the YouTube channel, and hit the notification bell as well. And I cannot forget to tell everybody that we are doing non-farm payrolls. We're doing it live next week, so please do come and join us for that next Friday. Have a fantastic weekend, and we will see you all next week.